I'm gonna be straight up. Today was one of those fucking days. It is one of those days that every trader will have where they have learned everything, but somehow nothing really clicks and nothing really makes sense at all in the market. Nothing made sense today for me. Maybe for you guys took trades. I'm very happy for you guys, but for me, I took one trade and holy fuck, let me tell you, I had no clue what was happening and why the market is doing this right now. Now, if you guys know, I'm currently long in SPX right now, but I got long in this area, right? As you can see, let me just mark. Oh my fucking god, this day. Why is this? Okay, there you go. I'm in this area, in this blue area, I'm long, okay? Aiming for the all-time highs. Now, as you can see, price has not been so nice. Nope, not at all. What is that? It decided to come into the consequent encroachment of this range and dump even more. Okay. Now the problem, as you can see here, is yes, we're going up. Yes, that's for sure. But let's go on the 4 hour, and you'll realize the really big problem here. So we dumped here on Wednesday. Remember that was the infamous dump that everyone knew about, but no one knew why it happened. And then we just bought everything back up. Literally bought everything back up. We did not break structure. We did not market structure shift. Just bullish price action all the way to that high. And then we hit that high. And then we jump all the way back down. Now, the only problem I have with this is that if we see price, which right now it is most likely able to and probably will reach those lows and go lower. Now, my fear, and as you can probably see right now, is this fair value gap. If you go from this low to that right here, you'd have this fair value gap. And this is, I'm just going to mark it. Okay. So you have this big, nice fair value gap. Okay. Probably on the daily here too. Is it? That to that? Yeah. And it's actually just the head of that. Yeah. Boys, if this goes lower, we're fucked. Because in real fact, if it takes that low, that means it can really go to the consequent encroachment. And that's bad. Because if it closes under that low, that means that we have just broke structure on a very, very, very high time frame. Let me explain. Right now we're bullish. This swing low comes all the way, creates a swing high. Swing high creates what? Gets broken through, so it doesn't create a swing low. Another swing high is created. This swing high, pay attention, swing high creates that swing low. Swing low creates a swing high, and that swing high takes out that swing low. If we see that happening, there is a market structure shift on the daily time frame. That, my friends, is huge. That means that theoretically, and I mean theoretically, price would be doing something like this. Going down, it breaks. Can go lower, whatever. It creates that displacement. So then it's got to come up slowly, hits the OT, hits the fib, whatever. And then the rest is history. In a way, that's how we start the trend, because the moment it breaks structure and the moment there is a change in structure, that's when we start seeing these big moves. This is also seen if you look at the hourly. I remember talking about this here. Okay, you see here, there's these lows, right? These protected lows. Now, the thing is, when price broke down on those lows, you notice how price didn't just continue all the way down, all the way down, all the way down. What did it do? It came back up, right? But why? Because of this. There's not only a fair value gap here, okay? But if you drew that swing high to that swing low with the fib retracement, right? Swing high, swing low. We just drew our OT, for example. Just look at that. Okay, so that's one thing. And you notice, right? It creates the range. It's above the consequent encroachment. It hits the OT of that range. Then it creates the perfect entry to go short again. And then off this dump, it dumps even more to break this low and to validate that market structure shift. So picture this happening on the daily time frame. So every fucking candle is a day candle. This, if it happens, that means that we could be going down for a long time, because I just want you to remember the standard deviation, right? What's the standard deviation? You go from the swing high to the swing low. Look how big this will be. Yeah. That's huge. That's very big. We would lose, if we go to now -4, we would lose more than 50%. More than 50% of what we have gained over the past 9 weeks. So everything has made all-time highs except SPX. And you're telling me that all of a sudden SPX is going to break structure and come down to, yeah, I mean, look at these levels. These levels line up. The -1.5 lines up with these. This lines up right in the middle of a fair value gap. -4 also in the middle of a fair value gap. It's just, every level lines up to the dot. So it's possible. It's very big, but it's possible, right? And that's unfortunately what could happen. I don't want to say tomorrow. I really don't want to say that, but it is a possibility. It could happen. And that's what I'm looking at. Now, the reason I think I just will not be trading this week, and I made a mistake trading today. Made 2 big mistakes. The first mistake is I'm trading on a school day. I'm tired. It's my first school day back. You know, I gotta be locked in, and I'm trading. My second mistake was also not planning. Like, I just didn't have a bias. I also just, to be honest, I'm gonna write this in my notes, but to be honest, right now I'm just being real. I was just looking for my strategy. So I was literally waiting for a high time frame PDA rate to hit. We were looking at this sell side liquidity that was down here. Let me just mark it for you guys. We were looking at the sell side to be hit. We also had that hour, 3 hour or hourly order block here that just got completely swept, and I know why, because it was news. Completely swept. Sell side liquidity got hit. I was looking for a market structure shift, which I took my trade off that, but you'll realize real quick why I messed up. And the biggest thing is not checking news. We had a lot of news today that impacted our trades, and let me tell you, that's probably why I fucked up. Hence also why the market moved like this today. I think a big issue is because I have a long position in that blue area here. It's making my emotions kind of go out the door. And I'm not disciplined as I would be if I didn't have a position, because right now in the back of my mind, I'm like, fuck, if this keeps going lower, I'm going to have to sell my position. I'm going to lose again. I'm going to lose more money. And that's not exactly what I want to do. So all I'm doing right now, and this is bad, and it's good that I'm realizing, all I'm doing is trying to think of ways for price to reverse back into my break even and even profits. That's what I'm trying to do. So any kind of bullish market structure shift we get is what I'm trying to take a little trade on, but ultimately that's my biggest bias right now, right? My bias right now, yes, it looks like we're going down, but to me in my head, I want it to go up. And I think that is horrible as a trader to have that in mind. So just sharing what I'm thinking with you guys, to be honest, right now. So without further ado, let's stop ranting, okay? And let's put this in the notes. Let's actually get to the price action of today, okay? Okay, let's go ahead and get our kill zones. Okay. So as you can see on the 1 hourly, let's see where we opened on Wednesday, right around 12. Okay. 12 happened here. You can kind of see that on Tuesday, we had that choppy price action. We kind of came down, right? And then this was well, this was the dump that happened pre-market, and then we had the choppiness, kind of chopped all around, and then we went lower on aftermarket, and then pre-market we came lower and lower. Let's just take a look at the news real quick. As I actually didn't take a look at the news this morning, but I just want to take a closer look to what we had today. 8:30 we had a orange folder FOMC member speaks. I didn't watch that. I didn't have time. I didn't see it. Then 10 a.m., which is pretty hard to miss due to the price action. I completely went over my head when I saw this, but I didn't really know what was happening. We had ISM manufacturing and PMI, which, as you can see, was bullish for DXY, which means that it was bearish for SPX, hence why the price action was showing so much selling volume. At the same time, we had JOLTS job openings and ISM manufacturing price. And then, of course, at 2 p.m., which I just did not see this coming, we had FOMC meeting minutes, and that was impactful, very impactful, okay? So with that in mind, we'll mark those out. So 10. Okay, so 10 a.m. is 1. And then you also had 2. And you can probably see just from those wicks, you can tell exactly where news hit. You can just tell by the wicks that it was a very high impact, volatile day, okay? So what ends up happening is we start going down. We have this low kind of marked out. That obviously gets swept. There's absolutely no reaction. We are also in the... well, this is 8 a.m., 7:30, 8 a.m. So really, there's a little reaction, but not anything super. So that gets taken out. Okay. London highs are up here. Asian highs are up here. So really, those are things to target if we're going to take a long position here, but that was just unrealistic for me. Obviously, with that bearish news, you can see that just spike up and then straight sell down. And then this is where I didn't see the news, but once you see this candle, it made sense why we would be going up. On the 30-minute, if you just take a look, right, we buy all the way up because of 10. There's ISM and all that, and we go all the way up, and then we lose all that. And so you're expecting now, right? It's almost like a hammer. It's reversing the hammer, and it's going down, down towards the ground, and you're expecting to hit the ground and go further in the ground and really dig deep. So that's what happened, but it dug deep, hit that liquidity, which is that red line right here, hit that liquidity and just swept right back up. And so when I saw that, I was like, okay, well, we could potentially have a market structure shift, which is what I was waiting for. So at first it was this high, then it was that high, then it made lower. I was like, fuck, it took that out, it took this out, blah, blah, blah. It just kept going up, down, up, down. It was all over the place, okay? So then I waited. I just waited on the 5-minute. I didn't really look at any other time frames. You can even tell on the 15-minute, there was no really swing high, swing low, whatever, to take any trades out of. Maybe notice that this is a market structure shift here, as it creates that swing high creates that swing low here. And then it ultimately takes that swing high out. The only problem with this range is, as you can see, with FOMC minutes coming out of 2, this trade wouldn't have been validated. Although, yes, it in a way kind of worked, even if you drew the which I don't think it would have worked very much. But if we just delete this trade real quick, the fib retracement actually hit pretty well here. I'm just saying, if you would have taken this trade here, you could have seen that the market structure shift had the fib retracement, and your levels would have actually hit. Your entry, I don't know where your entry would be. I'm guessing it would be in some kind of fair value gap that you'd find up here. Probably OT. I can't really find anything here. Maybe on the 5-minute. See if we can find anything. But anyways, that's where it would be, and then you'd enter there. But unfortunately, with FOMC minutes, as you can see, price action, your contract, if you're trading options, which is what I do, your contract would have been all over the place, and it would have just lost its contract and lost its value literally in seconds. And I just would not recommend it, right? So anyways, I did not wait on the 15-minute. I actually waited on the 5-minute just to see something happening. And I saw something, right? This was the swing high it created right here. at 1025, and swing high creates that swing low. That swing low is actually right under that high time frame PD array, which we marked out as that sell side liquidity. I identified a fair value gap that was created off the push up. So yes, this push up was expected. I was expecting some kind of move up, some displacement. But you do need to realize that this displacement looks bullish, it looks huge, it's good. But when you compare it to this move here, which we really need to buy all the way back up, it's really nothing. It's barely 50%. It's really, really not that big of a deal. So to me, the deal breaker would be, oh, let's go ahead and break that structure and let's go ahead and do a market structure shift. So what I was expecting was that on the 5 minute, the swing high would be broken because of the swing low. So far, yes, it looks good. Swing low creates, those highs, blah, blah, blah. It goes up, it goes up, it goes up, it goes up. It goes up, and then it doesn't quite close there. So I'm looking on 15 minute. 15 minute doesn't look promising at all because this is just another high made, lower high, and then lower low, and then it just gets broken through. But this is not a swing high on the 15 minute. That's why I was a little, on the 5 minute, because on the 15, it's really nothing. It's just another regular high. So I was kind of worried, and we also had that fair value gap. You guys see this, we also had a fair value gap here. So I was like, okay, well, this is definitely selling off. So what happened, right? Because this fair value gap, I'm just now noticing this fair value gap, right, gets traded through, and you can see it all in it sweeps that internal high here. So you could be thinking, wow, this goes down even more. So yes, you might be thinking, some people might have taken that trade, to be honest, but I took the opposite. I was looking for that market structure shift. You can see the closure of these price is under that level until we close here. And this is where it was risky, and that's where I just traded demo for this because I knew it was going to be easier to enter and it might be easier to see, but it's also a very risky trade. This doesn't really apply to my strategy because my strategy teaches that you need multiple time frames to be on the same page as you. So if the 5 minute isn't linked to the 15 or the 30, then we've got a problem, right? Obviously, it's not going to happen every time, but if you see a market structure shift happen on the 15 minute and there's also one on the 5 minute, then there's a clear sign of something happening here. But the 15 minute just looked very regular. Okay. So what happens? We close literally maybe 1 cent away. Literally 1 cent away from that high. So to me, that's a valid market structure shift. Boom. We mark it as that. Okay. So now what do? We draw the OT, we draw the, what's called the fib, right? We draw our levels that we have been taught. So swing low to that current swing high. What does the OT tell us? Oh my God, what does the OT tell us? The OT tells us that price would like to potentially come back into, let me just delete this, potentially come back into this price area level, okay? So now what do? On the 5 minute, there is nothing that tells us that there's no fair value gaps, and there's no order blocks in that region. So we go up one time frame, 15 minute, you're not expecting a lot because it's just one candle. So one candle can't really do anything. So 3 minute is under the 5 minute. So we'll just go there. Is there anything that we can notice to maybe take an entry? So if I were you, right, you might be, oh yeah, this fair value gap here. Sure, yes. And I'm pretty sure that's what I had marked out on my screen before. So we'll keep that there, right? Is there anything else? As you can see, this takes out, so no fair value gap. Is there an order block? There's an order block there, but it's completely under the zone. There's really nothing. Is there anything on the 1 minute that we can notice? Let's see. At the golden zone, there's nothing. There's a breaker here that gets broken through, doesn't get traded back into. Actually, no, it doesn't. Well, kind of here, but that's about it because it gets broken here. So breakers out of the question. Let's see. Is there any fair value gaps anywhere? There's an inversion fair value gap right here on the 1 minute. Fair value gap. There's an order block. There's more order blocks, but this is all in the zone. So this is where the zone stops, and that's where I can't really go lower than that, right? We don't want price to trade and close below this black line if we want an entry. So when I see this, and when I saw this at first, I entered right off this fair value gap, I'm pretty sure. The honest reason why is because I didn't have the OTE. All I had was, I'm pretty sure I just had the 1 minute fib, or I had some kind of fib Anachi tool. Where's my fib like this? Actually, the fib tool, right? You can enter all of these levels, but I marked out the mean threshold here, and I think this was a 5 minute, if I'm not wrong. Marked out the mean threshold of that range. And I basically told myself if price comes basically under that mean threshold, so under the consequent encroachment, it's going to be in discount, which means it can start buying. And so that's when we would see that that fully big move up, right? So eventually we do get that, but I'll show you what actually happened, and I have executions I'll show you guys later. I'm trying to find, I wonder if this probably wasn't 15. No, I'm trying to, is it 3 minute? Because it looks pretty big. Okay, yeah, it was a 3 minute. So, drew that 3 minute fair value gap, which was under that consequent encroachment. Saw price react very nicely into it. So price, obviously market structure shift happens, closes above. We get that retracement back, obviously, okay? After we get that retracement back, we drop into that fair value gap. I entered all of the consequent encroachment. So this is where I entered, okay? Consequent encroachment right around here, okay? I'm pretty sure that's where I entered. Now my stop loss is the big thing here. So my stop loss, I basically had it at that low, I'm pretty sure. Right here at that low. I like to have the stop loss where it would be obvious to have them, if that makes sense. So when I had the OT drawn out, or when I had the fib, you can see that anything after the OT level is gone for either a non-valid trade. So that means that the trade is just not valid and I just made a mistake somewhere in my analysis, or either price, obviously like news, just gets taken out completely randomly. But this low indicates that, first of all, it's a swing low on the 3 minute. I'm pretty sure on the 5 minute, yeah, it's just a regular low. I don't want to target this low. And the reason why is because if I put my risk to reward down here, or my stop loss, I mentally already know that if price comes all the way down and past these little tiny lows, I already know it's going to break this low. Like it's instant in my mind. I know it's going to happen because there's nothing else here that it wants except the OT levels. So I know that if this low gets broken, I'd rather be out of the trade than lose a little tiny more and potentially lose way more than I would like because it might just break right through. That's not what I want happening. Okay, so I place these lows. Usually it's not, I know I used to say I'd place them like right at the black line of the OTE, but as you can see, if we enter on the black line, it's got to be at least a tick away or maybe 5 ticks away from my actual entering price. Now for the take profits, this was a little harder, but for the take profits, I have this gray box and you'll notice it's lined up consequent encroachment with all these levels. And I'll show you, and this is where I love ICT for standard deviation. As taught, you take the swing low to the swing high standard deviation. So swing low, 5 minute, whoops. Swing low, swing high. Market structure shift. Motherfucker. And you'll notice that everything lines up quite perfectly. And when I mean quite perfectly, I mean that the -1 would be in a way risk-free. I'm pretty sure risk-free would be 1-to-1. So it'd really be like risk-free is like these highs basically. Like anything above these highs is risk-free. So I was risk-free like a while ago. But -1 lines up obviously here. That's like the first take profit of the trade. Notice that we're in at this consequent encroachment of this fair value gap. We added more to that position here on that little doji wick because I thought I was going to push up even more and break those highs, which it did eventually, but it didn't break on this. Kind of came down. I was like, oh fuck. I kept holding. And like I said, if it broke those lows, I would just immediately know that it would just come all the way down and it doesn't want this position. It doesn't want this market structure shift. I'm doing something wrong, right? I didn't notice that there was that 3 minute inverse fair value gap, but as you can see, it worked out pretty well. The closure of those body wicks closed above that consequent encroachment, which shows us bullish price action here. -1 is also a target, but the only thing that I didn't realize was, drumroll, FOMC meeting prices, right? Or meeting minutes. I didn't know that was coming out. And so unfortunately, when my -1 hit TP here, I closed out all my positions because I don't know how to set like limit orders for each of these levels with TradingView, like paper trading or whatever. So I just took one big position. I was all out, right? And then this is where anything before a red news event happens, we consolidate, we kind of move a little, we're kind of all over the place. So yes, we hit a major key level, we kind of liquidate that level, and the next thing to do is kind of calm down, liquidate it. There's some fair value gaps here that I'm marking out, and then after it hits that fair value gap pretty nicely, we get the minutes, and this is where it just all comes wild. So as you can see with my stop loss, if I was still in this trade, aiming for that -1, maybe -2, I was presumably, if you're trading this like realistically and there's no news, it would be in the -2.5 that you're aiming there because of that consequent encroachment lines up with that those engineered liquidity. That would be the trade of the day, right? But unfortunately with the minutes, it's kind of ruined our day, because if we didn't have those minutes, there would be more impact on the upside. Unfortunately, the minutes were kind of bearish, and boom, or bullish, my bad, but we had bearish price action down here, took out those lows. But it really, like, if you had an option contract, trust me, that contract would have been in drawdown and still in drawdown even if you're up here. I promise you that. If it was a 0 DT, you'd be fucked. Anything below a week, probably fucked too. So unfortunately, this trade was, I want to say, 50% successful. So yes, I made money, then it went to break even, and so I made money, like I didn't lose money. The only thing I'm upset about is that I didn't realize there was news. And so if I knew there was news, that I probably wouldn't have taken the trade. But hey, it shows that I can take a trade without even knowing news. And I promise, guys, I did not know. I like completely wiped out. I was like, there's no way we have news. Just did not come across my radar to check. And then anything after this, right, was just complete bullshit. I don't know why I drew this fair value gap. It was just, I can show you right now. It's going to be funny. But you can see my orders. No, not my orders. We want executions. Yeah. So you can see, I know it's a little crazy. Just don't blame me on this, but we'll go over this, right? So like I said, we bought here. You can see where we bought. We bought right at the consequent encroachment. We bought 5 contracts. And then we bought even a little more, which unfortunately was right at the close. And then you can see we just got fucked right there. Now, notice my stop loss is here. My stop loss, I swear to God, my stop loss was there at that wick. So it came close, but it didn't stop me out, right? And my mental stop here, because it's such a low stop loss, my mental stop, I don't have a mental stop, right? Because I will be losing maybe $50 or some. It's not, I don't need a mental stop on this trade. But if, let's say, it was a way bigger trade and that stop loss was like all the way down here, for example, that mental stop would have been obviously like triggered, right? Obviously, but it's such a small stop that I can't have that mental stop, because realistically, a stop loss is supposed to mean that when price hits that stop, you did something wrong, right? At this point, my stop loss would rather be here, because to be honest, if my mental stop is that strict, then why have a stop loss, right? Because your mental stop would just be like, all right, you're out of the position. You see a black bar, you're out of your position. And even though this turned out good, if I stole my position, it wouldn't have been good, right? So that's one thing to notice. Take profit 1 hit perfectly, right? We added more again here, boom, came all the way. And you can see take profit hit at the -1 quite literally perfectly. And then we were a little dumb. I was like, all right, I'm pretty sure I was in French class. I was not paying attention. We added even more. We added, pretty sure it was 30, bro. I messed up. 35, so 45, 50. We had 50 fucking contracts here in these shorts. As you can see, I had no clue that this was happening. And so when FOMC minutes happened, look what happened. I sold everything, because I was like, fuck. Like, well, I sold down here, bro. I was like, fuck. It's going to fuck us in the ass. So even, I mean, we could have made money up here if I held all the way to like 225. I was in the middle of class also, so this was not worth it. And to be honest, anything after minutes or FOMC, I would just close my laptop. I'm done for the day. I had my profits. If this was real money, I would have just not even tried to trade anymore, because fuck that, you know. I should have realized that there was news. I should have realized I shouldn't have traded. You know, should have realized that pretty early. Unfortunately, that's not exactly what happened. But I'm happy that I'm making these changes here. I'm happy that I'm realizing what I'm doing. And I guess the biggest lesson for me today was not having proper analysis and kind of waiting for a play to come out. Now that I'm realizing while talking about this, I'm realizing that the strategy that I have can always work when price hits a high time frame PD array. So as you can see, even if you come down on the daily doesn't have anything. It doesn't have that sell side. So let's go to the 4 hour. Does that 4 hour have a, yes, it does. That's a swing low in that 4 hour. That's big. That's big. That to me, the 4 hour, if you're trading on the 5 minutes, the 4 hour is a very big high time frame PD array. That to me is big. So obviously with these levels, I'll show you right here, when we had this, did we hit any kind of marked liquidity? Maybe like an order block, but that wasn't marked, right? What was really marked and what we were aiming for was that 4 hour liquidity PD array. So when this little move up was made at 10 a.m. and stuff, even though I didn't know it was news, I knew that there was no market structure shift meant to be happening because we didn't hit a high time frame PD array, right? And even if it did, take this for example, even if it did, where would the market structure shift happen? Because to be honest, I don't see one right here. I mean, kind of swing high gets created here on the 5 minute. That swing high creates what? Swing low here. Well, okay, swing low. Creates another swing low here. So swing high, swing low, gets taken out. Okay, if we draw our standard deviation, this is just for fun, guys. Standard deviation, where would this level be? Okay, so the complete target would be negative 2.5, which kind of does line up with this area. But look how unrealistic that is. I mean, it's not super unrealistic, but it's far. I mean, it does line up with that. You know, that could be your target here, but to me, it would be unrealistic to come up and take all that, even though we've just dumped in the morning and we have bearish news. So extremely unrealistic. So again, that's another, you know, thing in my strategy that I gotta be patient, and I guess I gotta be happy with just taking one profit and going break even. That's a win's a win, you know. I prefer to have better wins and more consistent wins where I know I'm gonna win and I know I can just step away and let, you know, my take profits go and hit for all of them, and then having to sit on the chart and hope for the best, you know, and having a leaf blower, like a hair dryer, up to my screen and fucking drawing the fucking price down or up, right? So I hope you guys learned something. If you haven't, please comment down what you guys want to learn or want to see, and I'll definitely do that. If not, I'll see you guys tomorrow.